The US debt will continue to rise over the next 10 years, while the European Central Bank has published its first report on the development of the digital euro, marking the start of a battle between the US and Europe over the dollar and the euro. The United States won't be able to escape its debt, at least not for the next 10 years, with a projected increase of nearly $57 billion by 2034, according to estimates from the Congressional Budget Office, also known as the CBO. In numbers, the federal debt amount will rise from the current $35.137 billion to $56.920 billion. Projections of U.S. debt growth align with warnings from former Speaker of the House, Paul Ryan. This politician foresees a short-term debt crisis in the United States. Ryan pointed out that there is a growing risk of the government experiencing a failed debt auction soon, something that would roil the markets and severely undermine the credibility of the United States. However, Ryan spoke of a possible solution to this impending crisis. Stablecoins pegged one-to-one to the dollar being the solution, such as Tether and Oozed. According to the former congressman, these crypto assets can guarantee continuous and significant demand for U.S. debt. Simultaneously, they can curb the de-dollarization brewing in world economies and serve as a promotional tool for the greenback. And look at the problems coming for the U.S. regarding de-dollarization. It's no coincidence that the new law in application, MiCA, which regulates crypto assets in Europe, has heavily penalized Tether. And a few days later, we have the following news.
The European Central Bank, ECB, has taken a significant step by publishing its first report on the development of its central bank digital currency, CBDC. This report highlights the importance of privacy, committing to using techniques like pseudonymization and encryption to protect user data. Fabio Panetta, a member of the ECB Executive Board, emphasizes that privacy is a priority for us and we are committed to ensuring it at every stage of the CBDC's development. Additionally, it mentions the possibility of offline transactions directly between parties without intermediaries, which could revolutionize the way we handle digital money. The implementation of this technology raises important questions about privacy and government control. At a recent Freedom Forum in Oslo, several speakers pointed out the risks of excessive government control, using historical examples of power abuse to suppress dissent. This fear is not unfounded. According to a 2023 report, 73% of respondents expressed concern about privacy issues associated with CBDCs. This development has also sparked debates in the United States, where legislators like former President Trump have vowed to stop the implementation of a CBDC in the country, arguing that it could threaten individual freedom.
And now, let's focus on the long-term crypto ecosystem. You are now looking at Bitcoin's chart on its daily time frame. Remember, we are still in a macro bullish channel, and if you notice, we are at the top of it. On the other hand, we must not forget that we have come from experiencing a strong bearish impulse and are currently in a complex corrective pattern. Why is it complex? Basically, a simple corrective pattern consists of a W and a I. But when the correction, let's say, does not prosper and becomes complicated, it gives way to the ZR, very aggressive and can easily reach or even surpass the beginning of the bearish impulse that gives meaning to the Z. Well, knowing that we are in a highly accelerating Z, we have the defense zone drawn here, which at the same time serves as the Z's guideline. As long as we don't lose this structure very clearly and aggressively. Now we'll explain how they can manage to do it. But as long as this isn't breached and its break confirmed, we must, and are obliged to be, positive in the ecosystem, as trying to reverse a Z is extremely dangerous since it often simply continues. And I tell you this, we tell you this from experience, it is not wise to try to turn the market around pretending to be the smartest in the room. Having said that, and understanding the context we are in, let's also perform a cross-analysis with MicroStrategy, which is very interesting to understand. The correlation between Bitcoin and MicroStrategy is clear and won't surprise anyone given the nature of MicroStrategy's asset, which ultimately is an organization dedicated to buying Bitcoin. I will soon explain how we can use this type of asset to our advantage. But first, welcome to Crypto Insight, your ethical and moral channel for cryptocurrency technical analysis. Here, we really know what we're talking about. We conduct advanced technical analysis that has been developed for over 12 years. We upload videos several times a week. If you're enjoying what you're seeing, let me know and leave a comment with your opinion. Like the video, subscribe to the channel, and click on the bell so you don't miss the next opportunity. Look at Bitcoin. We see how the price on its daily chart has come to attack the defense zone again and again, and it seems there's no way to break it. Undoubtedly, the price level around $59,700, this whole rectangle, is a key level. Considering that we've already been through a market trap, it makes sense for the price to react over the defense zone, and it also makes sense that we might see some positive reaction in the market over this zone, as we consider we are at a market extreme. But it's true that at Crypto Insight, we work with cross-analysis, and this time temporarily. I bring you MicroStrategy since I previously mentioned that it's an asset that goes extremely hand-in-hand with Bitcoin and the crypto ecosystem. They simply trade on Nasdaq, but ultimately, all they do is buy and buy Bitcoin. Think of it as a way to circumvent the rules to create a synthetic product on Bitcoin legally. Not sure if I'm explaining this well, but it doesn't matter. On a macro level, we identify the Z defense zone at those levels around $1,200, where we also perceive the trap. Unlike Bitcoin, the MicroStrategy asset hasn't dropped towards the defense zone like Bitcoin has. But note that recently in MicroStrategy, we have broken through this micro defense zone to seek and test the origin of the break on the creek of an accumulation process. Look, we are well aware that we use very advanced terminology and technical analysis, and if you're new, everything I'm saying might sound like gibberish. All I ask is for you to have faith and trust in us. And if you want to advance in your technical analysis skills, don't give up. Keep following us. Keep watching the new videos. And trust me, from the experience of other users, it's just a matter of time before you understand us more and better, and your analysis skills consequently improve significantly. As we were saying with MicroStrategy, we have gone to seek the creek. We are now in a potential trap scenario over this micro defense zone where the price might, hey, why not, recover to continue its upward trend. That's what we had seen with Bitcoin. But what happens? MicroStrategy tells us that the defense zone is a bit lower. In other words, if the cry of the accumulation process is breached, what would that imply? It would imply that the micro defense zone was indeed lost, bringing its consequences. What are the consequences of losing a defense zone? Catastrophic. If buyers defended here and buyers are no longer present, what's the path? Downward. And what does MicroStrategy tell us? That if we fall even lower, it's not the end of the world at all, as we will still enjoy a defense zone that protects us if we draw parallels between MicroStrategy and Bitcoin. As you see now on the screen, with Bitcoin on your right, let's say the following. Look, if MicroStrategy dropped a bit to this zone, what would Bitcoin be doing? Simply a trap scenario over the defense zone to eventually recover. And MicroStrategy will simply have come to test the defense zone to then rise. Everything aligns and fits. So, what do we expect from Bitcoin? We expect the price to begin an upward move sooner rather than later, as we are at that interesting hotspot we have been looking for. But of course, we must also consider a structural trap that scares before starting the recovery upwards. As I showed you a moment ago, MicroStrategy warns us about this. Not just MicroStrategy, but also other assets like Ethereum. But keep this in mind. At Crypto Insight, we are positive. As long as the Z guideline marked in the global crypto ecosystem isn't broken, we remain positive. And let's see what Ethereum tells us.
We have the Ethereum chart on the daily time frame on screen. Notice how, like Bitcoin, we are traversing a bullish channel. Also, after this strong bearish impulse we have experienced, we are now in a macro corrective pattern where we identify the macro WY and Z. At the same time, we have identified the macro Z guideline. Maintaining the time frame but zooming in a bit, I show you the Z guideline we are talking about more closely. As we can see, this guideline is still valid. It hasn't been broken. This obliges us to remain positive in the crypto ecosystem. How can we follow the price at these levels? Well, after this accumulation process, the price has come to recognize the creek. That is, a visit to the origin of the break. Therefore, sooner rather than later, we could expect the price to turn around to continue looking upwards. Anyway, reviewing the structures, look if we have room to go down. And this is where the cross analysis with Bitcoin comes in, because if Bitcoin gives us that trap scenario we were talking about before looking upwards, then we could expect the price of Ethereum to fall below this crypto and come to seek the PLC of is distribution near $3,100, or come to recognize the Z guideline to then look upwards. In summary, we remain positive in the crypto ecosystem on a macro level, and doing a cross analysis will let us better see when to start looking upwards. If you like this advanced technical analysis, let me know in the comments. Also, like the video, subscribe to the channel, and click the bell to not miss future analysis. Also, share this video with your friends and other trading and cryptocurrency communities so more people can grow in their trading. Good luck with your positions, and see you next time.